This executive order is the fuck around and find out order, also known as the FAFO. This order is for everyone who fucked around and will now find out.
Hold it. This is a good one. Is everybody listening?
Good morning, everybody. Hopefully you're having a good Monday. We got a lot to talk about today. We've got the Japanese prime minister resigning and a new, more conservative prime minister looking to take the helm. That should be interesting. They'll want to lower interest rates too, so we'll see what that looks like in regard to their bond market. We've got Russian attacks against Ukraine escalating. I think what's going to be interesting about that is I think we're going to end up, I don't know about sanctioning. I don't think that's the right word. We're working with Europe right now to basically implement tariffs to a larger degree against countries like India and China. Now, Europe's going to have to stand up to China. That's not an easy thing for Europe to do, and it's not something historically they're very good at. But I do think that's what Trump is pushing for. That's how we apply the greatest amount of pressure to Russia in order to end the war. And they're the ones we need to apply pressure to get that to come to an end. We also have Trump working to negotiate a deal between Gaza and Israel. We have more attacks against Israel. We got a lot of geopolitical stuff going on. And then we're at the doorstep of Venezuela, and I think we want to attack. So again, just a lot of really interesting stuff happening geopolitically around the world. And I think that's only going to get more interesting. But to start off here, I thought today we would take a look at Tom Lee here and listen to what he has to say about the Federal Reserve and the potential of a rate cut and his thoughts about economic data. And then we will go from there. 1 second.
Or I should say the debate maybe the White House is having over these jobs numbers and what it portends for the economy and therefore what it portends for the Fed.
We can see that Fed fund futures jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation and therefore justifying actually one additional cut. So I think that makes sense to me because we know inflation and that August CPI gets reported this week may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly.
And are you of the view 3 times this year, minimum?
Sense. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed's responds to that. And if it does, it's going to be good news because the bond market is going to take comfort from the Fed at recognizing the labor market's weakening.
I agree.
Hey, Tom, even if the Fed cuts rates, it controls the short.
Somebody said, are we going to get 50 bips? We could. If we look over here at the CME, let's just see where we're sitting right now. Refresh here 1 second. Let me go ahead and do it again. Right now, we're set up for 90.2% chance of 1 cut and then a 9.8% chance of 2. We do have more economic data coming out this week, though, that'll let us know if inflation is a concern. If inflation is a concern, I think we get 1. If inflation is less of a concern, which I think is possible, then we end up getting 2. So, and for today's economic data, real quickly, let me just refresh here real quick and tell you what we're looking at. We got consumer expectations at 10. So really, we're not going to see anything too interesting this morning. And then we have consumer credit change. That should be interesting. That goes through July. Really, though, the big stuff is probably coming on Tuesday. Let's see. Tuesday, we got non-farm payrolls, New York Fed Treasury purchases. I thought we had one other. Oh, NFIB Business Optimism Index. I don't think we have anything else today. Let me just see here. No, it's going to be consumer inflation expectations. That's the big one, and that won't come till 10. So, and then And then again, we have non-farm payrolls annual revision coming tomorrow morning. And then also, what was the other data point? I thought there was another one. The business optimism index. But outside of that, it's really going to be Wednesday, Thursday, Friday for all the big stuff. That's where we get PPI and CPI and all the rest. What impact will the newest sole player, Ford, will have on DFTV and UPXI? I don't know if it'll have much. It might steal some thunder for a minute. That seems to be kind of the going narrative. I see both of those treasury companies up about 3%, 2.5% to 3% in pre-market, whereas the 2X fund is up 8.67. So the 2X is actually winning. Treasuries are still lagging. I think that's going to happen until people start to see greater euphoria. I think we're just going to continue to see lag. We got Meta Planet looking to close a gap today. It's got another 7% drop to get there. The only treasury company I'm seeing with any kind of strength, and then we'll get back to Tom Lee, is the Smarter Web Company. And I think that's just because it got completely and utterly wiped out last week with that 33% drop day. So it had a nice reset, whereas some of these are trying to still get theirs. Metaplanet, I think, again, 7% down, and it's good from the Bitcoin side of things. And but I do think Solana is going to take off, and this is good. So again, this is in the UK side of things. We can see where we're getting back up here to where we broke down, and in the process, we should see a run up here to about 180 or 166, if I can read this correctly. My vision is not too good. My glasses are supposed to be better, but they're not working super great. I don't know if that's a matter of adjusting or if the field of view just isn't good. I don't know. But yeah, so we could see this thing start to run up and get back to some better numbers. It still has a long way to go. It actually dropped as far as 84% down from where it was sitting at its peak in July, or is it into June? Into June. So yeah, July, August, and then part of September, a little over 2 months. 84% drop is a lot. And so I know a lot of people are feeling pain from that, but this one could be the beacon that kind of shows us where we're headed next. Let me get back over here, though, to Tom Lee. 1 second here.
Short end, but not the long end. What do you anticipate happens on the longer end, and what do you think happens to the mortgage market, too, as a result?
The long end is something to wonder about because we know globally, the 30-year especially has crept up. And we know that the Fed and other central banks have acknowledged that.
Yeah, but the U.S. version of that has been better than Europe and Australia and Japan and every other country across the West.
Monetary policy has a lot of influence up until 5-year. You know, the correlation is 90%. But once you get into the 10-year, the bond market is making its own decisions about growth. That is something kind of troubling. But on the other hand, I think mortgage rates could come down sharply because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move.
See, this is something I don't think people are paying attention to. So I want to really take note of this. I might have to do a post after this is over. So what he's saying is the spread between the 30 and the 10 are so far apart that it's normally 150, 160 bips, but it's at 300. So we can get a 1.5% drop in the mortgage rate just from that alone. So what does that put us at? 5.5%. And then on top of that, again, modification of the supplemental leverage ratio, all the other levers that the government can pull in order to be able to show that they can pay the bills and keep the lights on, which there are plentiful right now, despite all the doomers. We could see sub 5 in spring, guys. We could see sub 5 in spring worth of a drop for the 30-year. Wouldn't that be crazy? Or even if we just got down to 5%, wouldn't that be fucking crazy?
That's a lot of easing for the housing market.
That is a big deal. And I know you're not an economist, but you have to have a view on where you think the economy is headed. 1
second. People are just not taking this into account. I don't hear it. Do you hear anybody saying, wow, guys, mortgage interest rates could be down to 5 or sub 5 in the spring? Do you hear anybody talking about that? If we drop interest rates we've got anywhere from 3 to 5 cuts that we're hearing about. So again, 75 bips to 150 bips plus. If we 125 bips. If we did the max into that 125 bips and we saw the compression down to the average that we normally see, the 160 on the 30, then you're talking a 3% drop from where we're at. And that's like under the fours. That's crazy.
If we get these Fed cuts and the economy, doesn't take a steep leg down, despite what we've seen with the jobs market, that's one thing. But if we get these cuts,
TLT would be okay if you were trying to dump it into cash. So I couldn't hate that. If you're trying to do TLT with cash, just like instead of having cash, that probably wouldn't be a horrible position to have. Real quickly here, let me pull this up. Sorry, Tommy boy. My buddy, my pal. I just got to see this. This is very interesting. I hadn't watched that part of the video yet. I've been listening to a bunch of things that Tom's been talking about today, but I had not seen that part of the video, and that is just such an awesome, awesome comment. This is why we listen to Fundstrat. This is why we're enrolled with FS Insight, because you just get things that you don't get anywhere else. Good morning, Jesse. Hey, Stoney, what's up, man? Yeah, here, let me just pull up TLT real quick. So again, the nice thing, oh, wow, it is showing strength too, isn't it? So yes, instead of holding cash, I don't think you can go wrong holding something that has dropped 50%. Plus, this is the non-consensus play. Right now, nobody is positive about the 20-year, the 30-year. They're just not, right? But I think they will be, especially if inflation data comes in low. And then we can break out of this downtrend that started in July of 2022. Or I'm sorry, just this trend. The broader trend has been going on a while. And it's so long now. Let me just draw another line here. I'll maybe draw it down to like the lowest point. It's so old right now. If this country isn't failing and you believe that we're going to be pro-growth and we're going to do a lot of good things, TLT starts to look really good as a place to put cash. Again, you get a dividend with this. Dividends yielding 3.77% as of recent. But then at the same time, you get to capture upside. And this thing's definitely going to have a lot of upside. So that's actually becoming more of an interesting play. I think maybe a better play between now and whenever the bear market kicks in here, versus something like, some of the options that are provided with MicroStrategy, because this is the first time that all these vehicles have been available. And I think it's going to take a while. It's going to take maybe now down near the bottom of the bear for people to feel good about these different vehicles that MicroStrategy has available that give yield like bonds. I think that's probably a next cycle thing. But all right, let's take a look here. Yeah, and Tesla up 1.4%. Gotta love it. All right, let's listen to Tommy Boy.
And you're also dealing with a slowing economy, potentially even a recession down the road. I mean, that's a completely different story. You looking at these Fed cuts as for good reasons, because we can do it and get away with it and it's going to improve the economy, or you looking at this and thinking, I worry about what comes on the other side?
Yeah, I'm going to take the camp that I think that these cuts are actually going to be very constructive for the economy, because the 30-year mortgage is strangulating the economy. We know housing has slowed dramatically.
Yeah, for almost since 2021. So it's been a while. Oh, we got Michael Saylor talking on CNBC. Right after this, we'll listen to Michael Saylor.
But we also know that there's a lot of pent-up demand for housing. So it's a market that...
And that almost 85%, it's anywhere between 80 and 85% of sales, home sales normally, are existing home sales. And that market's been frozen because with interest rates frozen, nobody's selling. They're not getting out of their 2, 3, 4% mortgage rates to jump into something that's 7%. They're not doing that. But if rates drop by 3% by spring, then all of a sudden it's like, whoa, hey, we wanted to sell. Now's our time. I'm seeing home prices going down in our area. Let's get the fuck out.
It does need to be fixed in terms of easing sort of supply-demand conditions. And we also know that ISM, which is a measure of business confidence, has been below 50 for 31 months. It's the longest stretch since the ISM's ever been created. So I think business confidence...
Seems like a big deal. Seems like it can only go up from here.
Confidence recovers if the Fed starts to cut. And so the combination of easing...
Holy shit, smarter web companies up 21% in the UK today. Is that right? Oh, no, never mind. That was from last week with the U.S. market. My bad.
Mortgage rates, business confidence recovery, I think is kind of a broadening cycle. And actually, I think that's why small caps have been the second best performing group after Mag 7 over the last 8 weeks.
Tom, you know, one of the things that Scott Besson said was he thinks that the economy is actually in better shape than we think. And
we have some Scott Besson interviews to watch, too, from over the weekend with Meet the Press. Really good stuff.
That the jobs numbers are going to get better. How does that factor into your thinking, or does it?
I mean, I think on the margin, I'd agree with Treasury Secretary Besson's comments for two reasons. One, when we go through corporate earnings, we don't have any increase in comments from businesses saying business tapered off in July or August. So even though the labor market shows like it's deteriorated the last 2 months, business conditions haven't. In fact, even the Fed's beige book, most regions reported improving conditions. So that is one thing. And the second is we know the labor market undergoes a lot of revisions, and we get September's benchmark revisions. I think it may show that the job market's been weak all year. And in fact, maybe the last few months have actually been stable. So I think...
Yes, I 100% agree. We've looked at some of that data already, and we're going to look at more today.
Treasury Secretary Besson is sort of correct to an extent.
Tom, Bitcoin, before we let you go, tell us what you think. We're at about $111,000. The upside, the downside from here?
112.
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double. But that's also going to be a double.
He's telling you Bitcoin's going to double. What do you guys think of that? What do you guys think of 250,000 Bitcoin?
From here.
Or 220?
Hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think by Christmas time, effectively, we could be at...
I'm sorry, Octo's up. Is that 450% today? Is that today? So BMNR has already made a huge profit off of their entry on Octo. My God, are they going to pump the shitcoin markets? Is that what's going to happen? Is Octo a shitcoin, or is this an energy play? Can you guys tell me? I want to make sure I'm thinking of the right thing here.
At 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
Yeah.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation?
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date, the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls, less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish. And we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
Or I should say that
I agree 100%. Here, I'm going to real quickly here just take a bathroom break, but for some funds here, we're going to go ahead and bring in Michael Saylor. I want to hear what he has to say too. So I'm going to hit the restroom real quick and we're going to listen to him for a couple minutes. We'll see if he does the whole diatribe or if he's got some new news or something concise to speak of. Here we go.
check out price of Bitcoin this morning. The cryptocurrency up over 100% this year. Joining us right now is Bitcoin bull Michael Saylor, strategy executive chairman. You know him from MicroStrategy. People are still getting those names, figured out. So we had Tom Lee on the broadcast. I don't know if you saw this earlier today. And he effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, 217 million this morning?
217 million, just
And it was a light week.
slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
You mentioned that you bought $250 million this morning, or $217 million this morning as you walked in. What's your dollar cost average for what you've paid for Bitcoin?
About $73,000 a coin.
And I guess I wonder if you think Standard & Poor's or others, or if anybody has any sort of bias towards crypto still at this point, because the S&P 500 just came out with their decisions, and they chose to go with Robinhood and AppLovin.
Here we go. I was wondering if they'd
strategy.
ask.
And a lot of people were kind of surprised by that. The stock actually was down a little bit. Do you think that there is a bias at any of the indexes or any places that come through this against the company with a lot of Bitcoin in holdings?
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time.
I do want to speak to Josh Mandel, the guy who everybody thought was a fucking time traveler and who guaranteed us that MicroStrategy would be included in the S&P 500. He said like 100% certainty or some shit. Don't listen to people that say things like that. I'm never 100% certain about anything. Yeah, anyway, it's fucking insane. Just ignore that guy.
There's a digital transformation.
His dad jokes aren't even that good.
In the markets. This is a brand new novel concept. Every quarter, we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
Can we just go back to the preferred piece for just a moment? Just because I think people want to understand, what a leveraged bet this is. But you're suggesting that because it's preferred, it never comes due. How can it be that they never come due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 20, 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. the board has to have the option to suspend it in duress. So it's practically speaking
He is so smart. He's so much smarter than all these people interviewing him.
possible to take your leverage beyond 20% to 30 or 40% even, but you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now.
True.
These
Right.
sort of treasury companies.
I love that. JT says, I guess I'm not wishy-washy like Josh Mandel, because when I say I'm getting a ball chopped off, I get a ball chopped off. It was only what was attached to my ball, just to be clear. But yes, that's true. That's true. You can trust me with the things I say.
Companies that are emerging, SPACs
Might not always be right, but you can at least trust my intent.
and other things that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first.
180.
So
No,
there's
but
an
I'm
talking-
explosion in the past 6
Right,
months.
but I'm curious about some of these levered efforts that may be using actual debt, not preferred the way you are, and how you think about them in the marketplace.
Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds. They may do it with converts. They may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit.
He's probably said everything he's going to say on here. It's awesome to listen to Michael Saylor, though. I don't do it as much anymore because I've already heard a lot of what he has to say. But there's always new little nuggets that come from him. Yes, ZA said NASDAQ filed with the SEC to launch stock trading through tokenized securities. That's a huge bullish news. Yeah, we talked about that, I think, the end of last week. But yeah, that's going to be good stuff, too. I wanted to speak to this. U.S. semiconductor stocks now account for roughly 11% of the S&P 500, an all-time high. So my take was they've probably never been more transformational than they are now. I actually think that artificial intelligence is accelerating way quicker than most people realize what it is. But at the same time, like if you have Grok, you know that, right? You get an update every 2 fucking days with new changes and revisions and things that are better. So it's pretty amazing. But if you're scared about this, if you're scared about semiconductors being too highly valued, there's a theme. You should own Bitcoin. Zero Hedge says the Ukraine war and the weaponization of the dollar was the straw that broke the camel's back. He's making the argument that the 10-year real rate versus gold, showing how gold's expanding and showing how we're not doing so well. I would actually make the argument, though, that we kind of like what's happening right now. We like the weakness in the dollar. We like the and again the 10-year bond, like what we're seeing right now. Again, gold's running like crazy, but if we actually look at the 10-year bond, it's rolling over. Is this the 10-year? Yeah, this is the 10-year. Look at this. It's rolling over. This is what you want to see. And this is the 2 years the same way, the 30 years the same way to a lesser degree. It really wants to see those lower rates from the Fed. But these are rolling over. It's getting better. There's actually more trust in the bond market, but that's not the narrative that's out there. Even from Zero Hedge, who doesn't seem to like the Ukraine-Russia war and our participation in it. Is SBET ever going to go back to the all-time high? It could. It could. And if SBET goes back to the all-time high, it would be a big number. I don't think this is probably like maybe we hit a new target. We could. Here's the thing. If Bitcoin does double, the main thing is what's happening with Bitcoin. If Bitcoin can pull off over $200,000 or even 180, is SBET going to hit a new all-time high? I don't know, but it could definitely hit 94 or 123. It could get up there. It could totally get up there because this is assuming that Ethereum is 10,000 or something close to it, right? So and I would argue that's a lot easier to do. If we look at crypto bubbles here, let me just pull this over if I can get it over there. If we look here just by market cap size, you got Bitcoin, right? Bitcoin's a beast. It's a very, very heavy container. It's got a market cap of 2.23 trillion, which is half of NVIDIA. Half NVIDIA. Bitcoin, the largest fucking cryptocurrency, is half the size of NVIDIA. But you got Ethereum where there's $520 billion market cap. So if you're saying that Bitcoin's going to double, you're saying Bitcoin could at least triple, right? So that 12,000, 15,000 number doesn't seem too crazy. If Ethereum is getting to $15,000, I think we hit at least the new all-time high, which is 730% upside. Now, I don't like SBET as much. I don't think their communication is as good. I don't think they've got Tom Lee. They've got a co-founder of Ethereum, which is great. But I just don't think, and again, they've got a BlackRock, I want to say CIO, who helped create IBIT, and he was like the head of digital strategy or something at BlackRock. So they've got good players, and again, I still own some. I think it's like around $80,000 in SBET, but I put more into BMNR because I just like BMNR better. And I think BMNR probably would hit a little bit less than this percentage wise, but I think the likelihood of it doing it is better. And I like being the fastest horse. I really do. But if you look again, guys, these containers, I don't think it's crazy to say that this thing could go to $1.5 trillion if Bitcoin is sitting at 4.5, you know? I don't think it's crazy to say that Ethereum could do that. And if so, both of these are going to do good. ETHZilla might do even better, which I did add to a little bit last week too, from the SBET that I sold. I can't remember exactly how much I sold. I posted about it. All right, let me see here. Oh, lots of questions. You guys got lots of questions. What do we got here? Winner takes. Yeah, winner takes most. Exactly. Good old James, right? And so I think that's going to be BMNR. Coincilium may be first stock that goes to zero. Oof. It could be. I don't know though. Here's the thing: irrational exuberance. If we get to $180,000 to $200,000 on Bitcoin, that thing could go up a ton. It could go up a ton because people start dialing up the risk curve. So I've still got mine sitting around. I think it's only like 60 grand or something right now. I got 1.2 million shares of it. Sequoians, yeah, I don't know, man. Some of these aren't gonna do well. This one actually, Sequoians though, it had a good end of the week. If we just look over here, it had kind of that moment where that Smarter Web had last week, where we were up 21% at the close last week, which was nice for a change of pace. But it seems to have done that too, I would argue. Although much lower than what I was expecting before. We still have 114% to get to the .618. But really to close the gap, it's 130% or 125%. So this thing, I think out of the two versus Coincilium in this, I think this is a much better guarantee. And I do think that we can easily get to the gap and beyond. And so a couple 100% or maybe even 450% in gains getting to this weekly 200 moving average. I don't think that would be crazy at all. So this thing could get in the fives. If it does that, I'll actually make some money back on my leaps. If it doesn't, then I'm bucked. And those will not make nearly as much. Anyway, let's keep going. We got a lot to talk about. Don't distract me. Trucking volumes down to 2019 levels. So this is fascinating. We're going to talk about this too. So you know how there's the de minimis rule that changed, and any packages under $800 before, they didn't look at those with the de minimis ruling. So China would basically use this as a way to be able to get all their stuff into the United States tariff free. Well, now they can't do that. And what we're seeing is crazy. Outbound tender volume index. And so you're looking at shipping here is just a massive, massive decline. And it's not just this. USPS is seeing crazy stuff too. We're going to look at postal traffic next. But trucking volume down to 2019 levels. Very fascinating. Now, we also have the Postal Service. And this is really crazy. International postal traffic. The USPS service, international postal traffic, is down 80% after this tariff change. So I guess it's going to be really easy to downsize the postal service without trying to fire a bunch of people because their traffic is plummeting, plummeting, at least internationally. And so the Post says it looks like all the post office is basically junk mail and Chinese socks. So true. All right. If you're going to get into Sequoians, now would probably be a good time to check it out because it's pretty beat up. What was it down real quickly here, and then we'll get back up. There's so many other bullish things, guys, in the data points, or not bearish things, I should say. What did we drop in this thing? It was a lot from the high. And again, this one is affiliated with Ben Workman. Not that he's responsible for everything with the company. He's just an advisor. But it's down 85% right now still from where it was, and it's high just, not even 2 months ago. And it went down almost 88%. So it's really hard for this thing to get much worse, unless it's a failing company. So, yeah. So I think if you're gonna do a YOLO bet, now's probably the time. Jerry, very long train. Jesse, any chance you could make yourself slightly smaller? Make myself smaller so that we can see the name of the stock you're looking at in the top corner. Oh, well, I mean, you can actually kind of see it in the right, too. I could make myself smaller. I kind of like looking at myself, too, though. We'll see. Maybe. S. Romani, why is SBET MNAV so low? I don't know. Why is everything so low? Everything's so low. Let's see what theirs is at. I don't even know if this is updated. Let's see if strategic... The reserve is updated. Is it showing 2 billion? Yeah, it's not even showing the 2 million ETH for Bitmine right now, but it's saying the MNAV is 0.86. SBET said they published something over the weekend saying that they did not issue any stock and to purchase Ethereum below the 1 MNAV. But I haven't seen them buy back their stock either, which is annoying. I think that's what they should do with their remaining cash. They should get the MNAV back to 1 to let people know that they're going to do the same thing that Bitminer said they're going to do. And if they do that, I think they'll restore faith. If they don't do that, then I think they're going to continue to operate at a lower than 1 MNAV. All right, let's keep going. You're bearish. What did you say? Probably tilt your phone sideways. My phone? I don't have a phone to tilt sideways. Seth Golden says you're bearish. Some of the worst retailers over the past 20 years have reported quarterly beats, even raised their guidance, Macy's and Kohl's, which is insane. I would not have thought such an outcome would materialize from Liberation Day, but here we are in September of 2025. Inside this weekend's macro market research report from Phenom Group. I love Seth. He's a great dude. He's more liberal than I am. He lives in the New York, Jersey side of the world. He drives a Tesla. I'm pretty sure he's Jewish. So he's got a lot of different things going on. But I love his takes because he does a really good job just with digging into the data and focusing on the data and not letting his political biases or religious or anything else bother him. And I love that. I love when people are like that. But this is cool, right? So some of the worst retailers over the past 20 years, Macy's, Kohl's are good examples. Macy's being probably the worst, have reported quarterly beats, even raised their guidance. I wouldn't have thought that from Liberation Day. Isn't that crazy? That's not the narrative right now, is it? This is not something that people are putting out there. But it's nice to see. It's very nice to see. Let's see here. What's this image? S&P returns during different GDP environments. We'll talk about a little bit of that in a second, too. But definitely check out Seth. He's a good dude. I put going up. This is another one of his posts. Funstrat. He said, Fed is about to cut rates for the first time in 9 months. When the Fed cuts in an expansion cycle, historically, the SPX has never been lower 1 to 12 months forward. Never. Including dividend. So let's just look here. So we can see all these different times where he said that we're basically pushing growth, but we're cutting at the same time. And within a weekend, you got 5.1% for the percentage return average. A month, it's 5.1. 3, it's 9.7. 6, it's 14. 9, it's 16. 12, it's 16.5. These are pretty good looking numbers to me. So again, we appreciate Seth and everything he tells us. He's a good dude. All right. I wanted to talk to this too. So I've been getting people. So up here, we have this graph, right? It says the car market bubble is bursting. Talks about delinquencies. So I said subprime auto delinquencies are only 1% higher than it was before the pandemic. So if you look over here, you can see subprime auto loans. That's what we're afraid of right now. Went from about 4.2% delinquency rate, 60-day delinquency rate before the pandemic to being slightly higher than that now, even though prime actually are still well underneath levels from the great financial crisis. And again, in 2017, they were right around where they are now. And then again, before the pandemic in 2020, or right around that time frame, they were right where they are now. It's probably a little bit after the pandemic. So I was just arguing that this isn't really a big deal. It's not much different than what we were dealing with before. We've got a K-shaped economy. This is how it works. Jensen Huang might be at CNBC right now. We might check that out in a minute too. So Dad Bod Trader, great name by the way. I may be wrong, but residential foreclosures hit 8% during the great financial crisis. That was a huge number at that time, which was the tipping point for auto loans. Might be closer to 10%, where we say, holy shit. So I want to be clear about this. The great financial crisis didn't come because of auto loan delinquencies. That was just a byproduct. Nobody really gave a shit about that. It was residential real estate, which was the big deal. People talk about commercial real estate being a problem right now, even though it's 1/2 to 1/3. But if you're not old enough, or were not investing around the time of the great financial crisis, we defaulted and had the great financial crisis because of a few different things, okay? First off, over 30% of the loans were adjustable rate mortgages, and we were getting ready to raise rates. That is the complete opposite of what we're doing right now. Right now, adjustable rate mortgages make like 5% or maybe even less. I don't even know. You guys look it up. It's not a big number. So there's no systemic risk from that point. Also, we had credit agencies like Moody's and these others that were taking debt that was shit, garbage debt, the worst of the worst loans, not credit worthy, garbage, just garbage. One of them was my loan. I got it through Countrywide Home Mortgages. It was a horrible loan. It was an adjustable rate mortgage. I learned a lot of painful lessons around that time. So there was that going on. And you had the credit agencies taking these really bad loans that people should have never been able to get because there were mortgage brokers selling these pieces of shit garbage. And then they'd package them together from like different regions and what other way that they used to package these. And then they said, hey guys, we've diversified. Yeah, CDOs. We've diversified the debt now. It's diverse garbage. And so since it's diverse garbage, it's now AAA. Imagine that. And so you've got all these banks and all these people buying these debts thinking they're AAA grade. And in fact, they're garbage. Imagine how much that fucked up everybody's books, right? So we had that problem to deal with. So we had people getting loans that never should have had loans. We had credit agencies lying to people and calling them AAA when they weren't. And then we had the entire system buying this garbage thinking that they were getting safety. And then we had that all off the backs of 30+% adjustable rate mortgage loans and getting ready to raise rates. That is not the environment we're in right now. I don't know how fucking loud I have to be to get people to understand this, but we are in no way with that kind of issue, whether it's commercial real estate, whether it's car loans, whether it's residential real estate, I don't give a fuck. There is no systemic issue that I can find in sight. So please stop making these tired ass arguments. Do we think that the bottom 1/3 of the economy is suffering? Yes, it's called a K-shaped economy. They are suffering greatly. You know how we fucking help them? We lower interest rates. That's how we help them. We make it to where they can refinance their debt. We open up the lending markets to make it easier for them to borrow. And we do all these things so that we can help them. You know what else we do? We help them get jobs by deporting illegal immigrants that have taken opportunities that they should have so that they can get paid and not suffer, and then at the same time be able to refinance debts to where they're controllable. That's how we start the age of abundance, and we're working on it right now. And at the same time, we're lowering their taxes. So anyway, just wanted to make a point here. Benjamin Cohen keeps saying that ETH might pull back to the 21 WM. I see, it doesn't actually have to really pull back. I know he's been saying that. I don't see that happening whatsoever. I don't see that happening. I think he's wrong. Real quickly here. So I said with this, U.S. companies have announced more than $1 trillion worth of new stock buyback plans so far in 2025. So we've got, $1 trillion in stock buybacks between some of these major companies. And you guys think the S&P is going to go down? Fuck no, it's not. Peter Diamandis, data center construction will outpace office buildings this year for the first time ever. Yes, isn't that fucking crazy? And then at the same time, we're going to start actually opening up the residential real estate market. It's good stuff. We're flipping our GDP. We're going to talk about that in a little bit too. Do I think SBET bottomed? No, it doesn't have to. It can go lower. We'll talk about that in a second, but it can go lower. The Kobayashi letter said this is completely broken. If you take a look at net revisions of jobs for 2025, we've seen 82,000 jobs revised. So the thing I wanted to point out here, and then I might have to actually just jump for a second. I got to talk to my wife. The jobs report data, if you look at this, look at the initial reading of all these days. So think of Trump just literally getting the job in the middle of January, okay? Then you got February, March, April, May, June, all these dates. Initial readings, very high numbers. First revision, lower. Second revision, lower. Total difference from original reading. Look at how badly these jobs are being revised down. And this, I'm sorry, Trump didn't do anything. You can't even talk about the first 3 months. You can start to talk about maybe April creating impact, but you can't talk about January, February, and March. We were already down almost 200,000 jobs in revisions. And now we're seeing more in May and June. So again, this data is from the previous administration, and I think the revisions that you're going to end up seeing for some of these other months are going to start to be revised higher. Again, look at the initial reading for June, guys. We're actually seeing a revision to the upside after the initial reading. I think you're going to see more of that. Jay Hahn, morning, Jesse. Did you have a chance to see CSE, SPTZ, OTC news last week? Just received $40 million in the Sonic Labs Foundation. I don't even know what that is. So you'd have to start off with just kind of telling me what it is and why it's a point of interest, because I'm not sure. Thank you to the 1,018 viewers that are currently here. If you guys could hit the like button, it would be greatly appreciated. Thank you very much. Real quickly here, I'm just trying to see if we had Cuomo talking about Namdani. God, I hope he stands a chance of winning. Real quickly here, I'm going to jump over to that. I need to go to the bathroom again. 1 second. Give me a second here. Give me a second. I'll be right back.
I want to thank you for joining us, and want to also just say we've asked some of the other candidates on the broadcast as well. So in terms of fair and balanced, we want to have everybody on the broadcast. Where are we in terms of when you think about your path to winning? If you think that there is a path, we look at Polymarket all the time. I don't know if that's a good thing to look at or not. And right now, Mamdani would still be at 81%. You're at 17%. Adams 2%. There's a question mark about whether Adams stays in. Want to get into all of that? What happens to Sliwa? How this all happens?
Yeah. Well, first, happy anniversary.
Thank you.
To both of you.
Appreciate it.
Thank
you for the cake. We brought some cake.
Yes. And to Joe. This is a much different race than the primary, and this is an evolving race. I think you're going to see a lot happen between.
I was just using that as filler, so I do apologize. Yeah, for people who don't know, I have something called gastroparesis, so I have to get a lot of bloating in my stomach, and then I end up having to go to the bathroom a lot, especially after 3 coffees and a super gut. So I do apologize. I am back now, though. Let me just do this. I want to He might have had something interesting to say, but let's get back to it. So has SBET bottomed? I don't know if it has. I think it could go lower. It might have bottomed, but from what we're looking at here, I mean, we could. I would like to say it's bottomed. I would like to believe that it's bottomed. It is down 88%, 86%. But let's just take a look here. Let's look at a fib retracement, and then we'll get back over here to more U.S. economic data. We got a lot of good data points today, actually. I mean, look at this. Based upon this fib level, we've already, this is a crazy drop. Even if we just look, yeah, this is a crazy drop. Now, let's check the more recent. We'll do this. We'll do from here to here, and then see how we're doing on the second bounce here. Yeah, we're below everything. I mean, we're technically below everything, but could it run down to the 200 moving average? Yes, it could. You just have to keep that in mind. These things can be very volatile to the upside and to the down, and when people are bearish them and they're not euphoric about the underlying asset, they're less likely to be if they're not euphoric about the underlying asset like the Bitcoin or the Ethereum or the Solana for these treasuries, then you're more likely to see pain to the downside in these others because they're not irrationally exuberant, right? They're not paying a NAV of 3, 4, or 5x, not even knowing what the fucking NAV means. But I do think that those times are coming. But yeah, so I believe Scott Bessent, we're going to listen to a couple of interviews from him. He's going to talk about how he believes that the difference from original reading and the jobs-related data is going to pick up in the latter part of this year, and that we're already probably going to see revisions to the upside like what we saw here in July, and we'll continue to see that stuff between now and the end of the year and really start to see it firing up into the beginning of next year. I got to say, guys, you got to understand this. This is so, so important. I really want you to grasp this. What is happening right now with the investments in the United States will be just massive heading into the beginning of next year. We have so many foreign countries and companies within those countries investing in the United States right now. And why are they doing that? Because they have a huge incentive with tariffs to move manufacturing to the United States. Right? A massive incentive to do that because it's more cost effective than eating these tariffs. And some of them are going to stay with high tariffs. You're definitely going to see that with China. I don't think you'll see that with India. I think we're just playing hardball with India so that we can get them to stop buying Russian oil, which has picked up dramatically since the war in Russia. If we want the war to end, we have to be tough on India because, again, they've just bought a ton more, whereas China's actually seen a reduction in their purchase of Russian oil as of recent. So we've got to play hardball with them. But outside of that tariff hardball with them, there are going to be countries like China and others around the world where tariffs remain high because we want to move manufacturing here. And I think that it's working, and I think it's really going to work because, again, there is 100% tax incentive for hardware, software, whatever investment you've done into the United States that you can deduct immediately. And so these companies can put a bunch of money to investing into the United States and then be able to offset revenues going forward for the foreseeable future while they ramp here. So it's a really beautiful incentive to move money here. And I can tell you, I've seen this happen anecdotally in my own personal life, like in the country of Panama and with the relations that I have there from my wife. And just throughout history of a lot of different countries in the world, that when you create massive incentives for investment in your country, you will see them. In Panama, the thing that they did was they said, hey, if you buy real estate in this country, you won't pay taxes on it for 25 years. And needless to say, the real estate market took off. And so when you create the incentive, like a bunch of famous people like to say, you show me the incentive and I'll show you the outcome. I think that's Warren Buffett, but it's probably been quoted with a bunch of people. Or maybe it was Charlie Munger. One of them. But you'll find the outcome. And I think with tariffs, guys, one of the most exciting things right now is that, let me refresh this real quick, is that the incentive is to move manufacturing to the United States. And And we're seeing all these countries and companies promise that they're going to do that. And then we're seeing a huge incentive from the tax side of things and with the federal government to make that happen. I think too many people are discounting this. I think they're going to regret that. I think they're going to find that Q4 and Q1 of 2026 are going to be really good times where we see, the economy do well. And again, this chart from Seth showing how a Fed cuts plus an expansion, which I think we're in right now, you get abnormal outsized returns. And so the consensus play right now is that the end of 2024, beginning of 2020, the end of 2025, beginning of 2026 is going to mark the end of this cycle and that you should run away. And I'm wondering if that's going to end up being true. Maybe it is in some things, but I think you need to be prepared for it not to be over. Just because, again, this time is different in regard to the actual fundamentals of what's going on in the macroeconomic environment. Seth Golden, again, he said, if housing and construction lead the economy and you're worried about construction employment faltering, the chart below, or the chart of the building and construction ETF informs your concerns are misplaced. So building and construction are showing new all-time highs. And I can tell you anecdotally in the city that I live, I've never seen as much construction as what we're seeing right now. Let's listen to this real quick. It's Trump's tariffs on foreign aluminum. So what's going on in the aluminum sector with tariffs in the United States? What are they saying?
Boost. Senior correspondent Steve Harrigan joins us live from an aluminum plant in South Carolina. Steve, what can you tell us?
Jillian, President Trump put a tariff into effect in June of 50% on imported aluminum, and that has changed things around.
Real quickly, I wanted to say Christian Soto said, this time is different, it's always dangerous, but we have to be open-minded. Here's what I agree with. This time is different is dangerous when you're looking at technicals. If you're looking at technicals and you're saying this time is different, you need to understand what's actually going on in the macro, because that's the really important part, right? A lot of the trends that we see, I think global liquidity is a huge driving factor of what we see in economics. And so if global liquidity starts to slow down at the end of Q1, we're fucked. But we have to look at it as, why will global liquidity slow down? Global liquidity will only slow down if governments become fiscally responsible or they practice austerity measures, which again is because they're trying to be fiscally responsible. Outside of that, they're going to fucking print. And we are in a time where they're going to fucking print. And I don't see how we get to global austerity and slowing down liquidity right now into Q1. The only thing that would make that happen is the reissuance of debt in the debt cycle. If we don't have lower interest rates, or if people don't believe that the United States is going to be able to repay its debts. But if we go into the end of 2025 and beginning of 2026, and the United States is on fire, and we can't find any systemic issues, and inflation isn't high, but we're seeing a lot of growth, or inflation is looking manageable, then we could just keep going. I will say this, though. I'm in the camp of be safe heading into the beginning of next year. But yes, we should listen to everything, especially really core, fundamental, bottom of the stack, bottom of the pyramid things in regard to our economy. If our economy is actually really doing well and liquidity is expanding, and we're seeing tons of investment into AI and robotics and autonomy, and we're seeing earnings revisions higher, we just have to be of the understanding that this could be in the early, to mid 90s. Maybe this is 96 and 97, and maybe it's not the dot-com bubble. The dot-com bubble, guys, there were so many companies with just absurd valuations that didn't even have a business model. I'm not seeing that right now. Now, is there some fluff and some stocks that are overvalued that have run up a lot over a short period of time, like 1,100% for Open and some of these other companies? Yes. Like, you got these small rocket companies that have high valuations, all these little things that we're seeing kind of fluff up. But I'm not seeing thousands of them. I'm not seeing tens of thousands. I'm not seeing that in the crypto world either. Most of the crypto altcoin stuff, guys, if you look here, and you dial down the risk curve and go to like, I don't know, the 1,000. Look at this. This is for the last week for the like top 1,000 cryptos. Let's look at the last 3 months and the last year. These things haven't went anywhere. And again, let's move this around a little bit. Let's not go so far down the risk curve. Let's just go to the top 100 and go for, I don't know, the last 3 months. So have some of these went up? Yes. Have some of these went down? Yes. But this doesn't look like parabola. This doesn't look like some major blow off top in the last 3 months within the altcoin sector. So this is completely different than, this is the last year. This is completely different than anything we've ever seen before. This is the top 100 to 200. Let's go back to the top 100. This looks different, right? So you see the top 100. Oh, and I've got this a little weird. Let me go by performance. So the top 100 looks a little bit different, doesn't it? They've done really well. But again, when you dial up the risk curve, it doesn't exist. People just have not been putting money into shitcoins. There has been no altcoin season yet. So again, we're just not seeing, and again, the Russell, let's just look at all these different things. We've got the Dow Jones Transportation Index. We've got the Russell, and then we'll get back to this video. Let's see, the Russell. This is basically the smallest or the largest 2,000 companies in the small cap sector, or I should say everybody in the small cap sector of the Russell 2000. And look at this. We peaked in the Russell 2000 in November of 2021 when we raised rates at the most aggressive rate in history. We haven't even broken that level yet. Look at this. Look at this level. This is meant to scream higher, and I think it's going to as rates drop dramatically. So that hasn't even went up yet. And let's look at other indices. Let's just look at other things that are out here. Emerging markets, guys. Emerging markets is in a breakout. I'll show you that in a second, too. So we've got emerging markets ready to break out. We've got the Russell getting ready to break out. I don't know. Let me refresh real quick here. We've got, I want to say, the Dow Jones Transportation Index. I don't know, one of these. Maybe it was industrials. I think it's industrials, actually. Let me see. Let me see industrial average. See what this is looking like. Yeah, so we've got this break just starting its breakout. There are so many, and again, emerging markets starting to break out. And then we've got these guys getting ready to say that, things are looking good in the aluminum smelting sector in South Carolina. All these areas are getting ready to break out with rates going down, with pro-growth policies. I'm fucking excited.
Here in a hurry at this smelter just outside of Charleston, you can see there.
Why would the job market worry me?
They're moving giant vats of molten aluminum. They're going to pour them into mold and then remove.
I mean, if the French default, sounds good to me. Sounds good to me. What looks better if the French government ended up defaulting in some way? What looks better to you? America? Do you think America looks better? Chinese bond yields are super duper duper low because nobody wants to invest in their stock market. Well, I mean, outside of idiots in the United States, but domestically, nobody wants to invest in their stock market. And so their bond yields are just crazy low. So they're not an option. And nobody wants to hold Chinese debt. And Japan doesn't look good. And a lot of Europe doesn't look good. And France doesn't look good. Where do you end up investing your money? Is it going to be in the place that's doing all the low taxation pro-growth policies? The one that's got the biggest tech companies on earth? The one that's pushing AI? The one that's getting ready to open up its housing market again? The one that's the world reserve currency? The one that's embracing Bitcoin and crypto? Do you want to invest in their bond market? I mean, our bond market, the United States is? I would say yes, right? I would say that this is the market that you want to be in. I'm going to say that.
The impurities. Now, this smelter was working at just a fraction of its capacity a few weeks ago. Now it's almost at 100%. New jobs also, jobs that often pay six figures. And when you walk around the factory floor and talk to the employees,
so these guys went from a fraction of their capacity to 100%.
You find a lot of former military men who are proud to be working now in this industry, like Chris Murphy, who served 2 terms in Iraq.
All right, that's cool. I don't need to hear about all of it, but that's amazing, right? Let's look. Gold is in a bull market. And by the way, when gold breaks out, Bitcoin follows. We'll look at some stuff in that in a second. So gold is in a bull market. It's quite stretched near term, but in the big picture, it remains an important portfolio diversifier. I agree. And again, it's in breakout zone, which is fascinating. So it's in a bull market, and we know Bitcoin normally follows. And if you think that I'm going to show you some stats that show how we're the most overvalued market in history. If you think that's true, why don't you own Bitcoin? Zero Hedge said it gets worse. All job gains were part-time. So full-time jobs down 375,000. Part-time jobs up 597. Yes, that is bad. But there's other things that are good in this jobs-related data, and we'll talk about that in a second. Kobayashi, a key recession signal is flashing red. U.S. construction spending fell 2.8% year over year in July, one of the biggest drops since the 2008 Great Financial Crisis. I think this is backward-looking data. I do agree, though, that it's flashing a recession signal, and I think it increases our odds of the fact that we will see the rates come down here soon. But there's data points that are showing, again, we just talked about them a second ago, that we're showing that investment in construction is going up and that it's bottomed. So I do believe that to be true. And this has seen, again, a big drop heading into this year. Recession signal, yes, but I think you need to be forward looking, and I think that data looks good. I said this is a great contrary indicator. This is hedge funds loading up on shorts. And so, again, I'm just showing that this is the highest open interest that we've seen ever, and that it dwarfs times in late 2022. Again, in late 2022 was near the bottom. And so we're sitting really high on this, and I think it just points to the fact that we can go higher. Go look at Octo. What is it up now? 1,000%? Of course it is. Wow. Let's see here. We got Peter. He said, according to Redfin, there are now more home sellers than buyers. This is a key reason for why home prices have fallen for 4 months in a row. This is good. This is good when you lower rates aggressively and they start to drop aggressively because, again, there's that 160 BIP disparity from the 300 we're currently sitting at for home mortgage rates, where once they see that we're in an easing cycle, we could see that really pull down hard. And we could see a 1.5% drop, even if the Fed didn't really do much, if they just think that we're seriously going to start, if basically inflation concerns start to go away and stagflation concerns. And I think that's exactly what's happening. I put, Grok, how does the current commercial real estate market compare to the residential market back during the Great Financial Crisis in regard to size and scope of potential impact? Because everybody's putting this out there, talking about how commercial real estate, office, CMBS, delinquency rate jumped to 11.7%, the highest level in history. First off, during the Great Financial Crisis, commercial real estate wasn't the real problem, but yes, it did go from a low 1% all the way up to close to 11%. And we've seen something like that now. I would argue that the delinquency rate is probably near its peak, especially with interest rates going down. So what we're seeing is more like 2013 and 2014, not the beginning of 2008 and 2009. Can we agree upon that? And so I asked Grok, how does the current commercial real estate market compare to the residential market from the Great Financial Crisis? And here's the response we got back. The current CRE market is $4.82 trillion in debt, with office delinquencies at 11.7% record high. In 2008, residential mortgage totaled $10.6 trillion. So think about this, guys. We're talking about 17 years ago, the residential real estate market was more than twice the size of what the CRE market is right now. That was 17 years ago. And the amount of inflation we've seen in 17 years is a lot. Go back and look at what mortgage rates were 17, or what the average like house price was in 2008, and compare that to today, and you'll see what a difference that is. So commercial real estate is super tiny by comparison. And again, there's all those different issues that happened with residential real estate back in 2008 that don't exist right now within commercial. Oh, wow. We just got through a U.S. economy, and that was it. Isn't that crazy? Isn't that nuts? Let's look at some Trump stuff here real quick. We've got China's been trying to capture Latin America, so this makes a ton of sense. So U.S. War Department, and we're now the Department of War, not the Department of Defense, and that is just a power projection. It's us trying to show Xi Jinping and Vladimir Putin that we aren't fucking around and that we're proactive right now, because if you're the Department of Defense, you're not preparing for war. If you're the Department of War, you're preparing for war. If you're preparing for war, that's a deterrence for it. So it's all about projection. We've got the Democratic Party, guys. I just wanted to point this out. Current Democratic platform is mass migration, dirty cities, men and women's sports, the ability to kill your baby, high taxes, inflationary spending, the government giving you everything that you want, anti-police, anti-male, anti-woman, anti-whites, anti-American, pro-foreigner, pro-gangbanger, and pro-Hamas. That is the current Democratic Party. I think that's going to be easy to beat. We've got Gavin Newsom here. Let's just look at Gavin. I used to do cocaine a long time ago. Long time ago. In my 20s, early 20s. When I did coke, it looked a lot like this.
Right now, I feel strange. It's interesting. I've been on a journey like most people, feeling great, feeling stressed, feeling doubtful. The last 2 days, I don't know what it is. I think it's maybe the dust settling after Madison Square Garden, seeing how that went, like kind of a roller coaster. But something's happened the last few days, and I'm telling you, that Des Moines Register poll. I mean, I don't know. I don't expect Iowa necessarily going in the blue column, but it says something to me that is of outsized importance potentially in terms of the outcome of this race. So I'm feeling honestly much better than I was even 24 hours ago. The last few days.
I've done so much coke in the last 24 hours that I'm feeling much better than I was a day ago.
What do you think it's saying? I think the biggest challenge for
I can't stand this guy. I don't know about you guys. Zero Hedge. U.S. is in very deep negotiations with Hamas to end the Gaza conflict. I do think that Trump is working hard. He wants to be seen as the president that was strong and that put forth and projected strength when applicable. Again, what we did in Iran was amazing. If you would have told me a year ago that Trump would be elected, let alone that he would have drop weapons and blow up all of Iran's nuclear facilities in an instant on a weekend for the fuck of it and have no ramifications whatsoever for that. And Iran, people aren't talking about this now, guys, but Iran is pissed. Think about this. Syria already collapsed, that part of the axis of evil with Russia and China, right? Iran needed help from Russia and China. And how much did they get? Zero. Okay? They're dealing with power outages right now in Tehran. They're dealing with the potential of running out of water and having to buy it from other countries because they have spent so much fucking money to project chaos into the world and into the West, starting with Israel. And they got no help from Russia after signing a multi-decade security guarantee with Russia. Nothing. China, nothing. These guys all paper tiger dragon them, and they got fucked. So the axis of evil is hurting. It's hurting, and Gaza, all these Palestinian terrorists, they're hurting. Hamas is not happy. Because they're getting no support from Iran, who's getting no support from the axis of evil. These guys, they might do little parades and drive around weapon systems and tell you that they're real, but you can take this much out of that, just doing my Gavin Newsom hand gesture. Things are not going well for the axis of evil. They're having a tough week, having a tough year. Also, I find this just hilarious. First illegal immigrant Muslim counselor for Boston has been sentenced to a month in prison for getting kickbacks. This says everything that is wrong with the Democratic Party right now, along with the big list I gave you a second ago. First illegal immigrant Muslim counselor was taking bribes. Funny shit. And I know people hate RFK right now. I don't. So whatever. I think he's probably one of the best things that has happened in this administration. And I think that Maha is real. And I think I trust this guy with my health way more than the last guy who had like a satanic, star on his chest and wearing a dog mask. I think that this is good, what he's doing, and I think that we should be skeptical about vaccines, and some of the things that he's showing already say that we should be skeptical about them. And I think that we need to not trust the researchers. We need to tell them, hey, where's all your research? What does your research tell you? Did somebody do a study that said the exact opposite of this? If so, why? We need to ask more. The scientific method says you should question everything. It doesn't say you should listen to the scientists and trust what they have to say. That's like saying, hey guys, listen to this Muslim scholar who tells you how to interpret the Quran, or listen to this religious guy who tells you how to interpret the Bible. You can still do your own research. You can still do that in every aspect of life, and I encourage you to. But let's listen to Robert F. Kennedy here. I love this dude.
Yeah, I mean, that individual actually came to my attention because early on during the measles outbreak, I promised Governor Abbott to send some money down, badly needed money, and help down to Texas. And this individual blocked that money for a month. I couldn't figure out what's happening. I gave the order. I'm running this agency. How come nothing's happening? And then we tried to get the vaccine safety data link, which is the data that supposedly the CDC tries to use to make good decisions on whether vaccines are hurting people and not whether there are side effects. For 7 months, he stonewalled us so that we could not get that data. He's also the individual.
Yeah, so these assholes who don't want to provide vaccination data in order to be able to have this reviewed and see if it was safe for people, like, fuck them. And I would like RFK to keep doing what he's doing. Thank you, sir. Just so you guys know, this is the kind of language that Trump used when he was talking with the Colombian president who was trying to be tough back in the day. Remember that during the tariff stuff? This is the kind of same language that he used talking about Iran and whether or not we drop bombs. Let's listen here real quickly to this post. Let me refresh here. It seems to be clocking. Let me see if this is a X thing or something. Oh, don't tell me X is broken. Fuck. What is going on, X? No, don't break. This is where my bookmarks are, bro. All right, we'll go back to that. Let me answer some questions. DRV, Cryptoverse, Benjamin Cohen. So RFK Jr. being over the target. So here's the thing. There are senators that are rhinos in the Republican Party that will be happy to get money from Big Pharma. So I don't trust any of them. And we definitely know the Democrats and what way they're leaning. So I'm still going to trust RFK. Can you guys hear me at all? Are you guys still getting the stream? I want to make sure with this thing clocking over here. Cryptoverse, Benjamin Cohen. So somebody said this earlier, but let's listen to it again. ETH could reach the 21 SMA simple moving average to around 3,400 by the end of September or 1st of October. I don't think that makes any sense. I know he keeps saying that. Yeah, I don't think that makes any sense. Could it dip under 4,000? Yes, it could technically. But I don't think it makes any sense for it to go anywhere near 3,400. You are. Okay, good. Thank you. Again, I'll show you the chart real quick and then I'll just move on. I'll have to skip bookmarks here though, if those aren't working. But let me just show you this. So I don't think what he's saying is true. It doesn't make any sense to me. Now, could we drop down though to this fib level at the 4,000 range, like to the 3,900? Maybe. And if you're looking at it like this and saying that this thing could drop even more, I just don't see it. I don't see why, with the purchases that we're seeing, we would see any kind of major drop. I think it's 3,900 maybe. Anything lower than that makes absolutely no sense to me. And it could be consolidating while Solana's breaking out because Solana's doing really, really good, up 4.2% today to 214. Let me just show you that again real quick. So Solana's doing real good, right? So could Ethereum consolidate while Solana gets its run and Bitcoin has a run? Yes, that could happen. Do I think we get down to 3,400? No, I highly doubt it. But Ben has been right a lot, so take that for what it's worth. Stream good. My X is fine. Maybe you need to refresh X. Yeah, I don't know. I'll try. Let me see here. There we go. Okay. There we go. We're back. We're back. Let's see here. So again, yeah, I think it's funny what the Democratic Party is fighting for. I think it's funny. I think Maha is going to end up doing really well too. And I think we're going to overthrow Maduro. And let me see if this works. Maybe this one doesn't work. Let me go down to here. Yeah, maybe it's just that. But essentially, it's Trump saying that they said, hey, are you considering attacks against the cartel inside of Venezuela? And he said, you're going to find out. So, again, this screams like Trump is going to fuck these guys up. California scandal, a homelessness executive making $430,000 a year is under fire for funneling millions to her husband's NGOs on 3 different occasions, charging taxpayer for open bars at her parties and spending $800,000 to silence whistleblowers. This is normal stuff. San Diego Police Department ignores Governor Gavin Newsom, crackhead Newsom, provides assistance to federal agents being harassed during immigration raids. Our role is to maintain public safety. So, again, I think we're going to see more of this. We're going to see more of this public safety role kicking in. We've got Stephen Miller uncovered a massive scandal in Washington, D.C. The Democratic-led police department has been systemically concealing crime statistics and even classifying homicides as accidents. Over the weekend, we've got 407-4. The House has passed the Stop Chinese Fentanyl Act, cracking down on the CCP's role in flooding America with laced fentanyl. So this is good stuff, guys. We've got Stephen Schrank, the special agent in charge of Homeland Security investigations in Georgia, who spent months investigating the Hyundai plant, hiring illegals, criminal charges. This is going to be interesting to see how this plays out. There's 475 illegals working there. And it sounds like they were not supposed. They had visas that were not supposed to allow them to work. We'll see if this is an issue that gets quickly resolved with South Korea. There was the deadly attack that happened to the beautiful Ukrainian woman. Again, just wearing a hat here and just chilling, just walked on this train. This guy who had 15 prior convictions stabbed her 7 times in the neck. People didn't do anything. Weren't even paying attention, saw blood on the ground, probably knew what was happening, but didn't want to make a scene because they probably didn't want to die too. No news whatsoever in the mainstream media. This is just the bullshit that people are becoming more and more aware of. Gavin Newsom state, we got Kim Hong, jewelry robbed in broad daylight. This guy was, I want to say 87 years old. Maybe it was 78 years old. I think he was in his 80s though. You can see how these people, almost all of them black from the ghetto. Again, when you just allow crime and the majority of your citizens that live in the ghetto are black or Hispanic, you're going to get this. They rob him. Look at this. Somebody just throws his ass to the side, assaults him. He ends up having a stroke. This is just California. This is okay to do. You can't even get the cops to come and help you with shit like this. Holy crap, says Table Salt from Canada. Someone started a website to track how many temporary worker permits have been issued in Canada. 3.1 million in 2024. This is insane. This looks even worse when you display the chart vertically, but it shows how illegal immigration has just basically exploded, or temporary worker foreign programs have exploded in their country. And the worst part is most of these people are uneducated. At least 1/3 of them haven't even finished high school, probably to half. And so you're making it to where we're automating a bunch of jobs away. Over 100,000 jobs have went away just in some of the biggest players in the S&P. And while that's happening, you're bringing in a bunch of illegal immigrants or foreign-born workers that aren't educated. And so you're just, again, destroying a K-shaped economy, destroying the people at the bottom. It's not a smart move at all. Jesse, I'm educating myself on drawing trend lines and curious if you're drawing wick to wick or candle body to candle body. That is, there's so much nuance to that. There's so much nuance and technical evaluations. You have to think about, I like to incorporate the fundamentals of what I know that are going on financials if applicable, and then the time frame I'm looking at, and the way the chart is being displayed, and the way things have oscillated. It's so fucking complicated, dude. Normally, body to body is probably best, though. So start with that rule. Jesse, can you check Tesla? What's the setup looking? I mean, it's beautiful. I posted about it earlier. The next point is 400. So we've broken out just like I said we were going to. We got our nice back test. We didn't even back test underneath the 200 moving average on the daily, which showed strength. Now we're in a breakout mode to the upside. This can be looked at as a cup and a handle. I think that's probably the right way to look at it. The measured move for that is in the 500s, the 550 range. I think at the very least we see a new all-time high by spring. And so that's the 480 range, but essentially we got to run here to the 400 range before we hit the next fib level. And then it's the .618 retracement level from where we had fallen in April, all the way down to the 215 range. So if you're looking to get out because you're worried that things short term could be worse for Tesla, I would wait until like the 480 range, honestly. At the very least, the 400 range. But honestly, like, I'm just going to be adding to this one. I hope it stays down. That's my bias. I hope it stays down. Yeah, I'll get into more charts in a second. I don't want to get down the rabbit hole too deep here on too many charts. I want to keep going. So again, 0 out of 30 indicators showing that the Bitcoin cycle is over. This is kind of a big deal, and I've told you all these other reasons why I think it's a big deal, and that we're nowhere near done with this cycle. Looking here, guys, Strategy has acquired 2,000 Bitcoin almost. We also got several hundred, I think, acquired from Metaplanet. So again, over 2,000 in a week. We get 450 that are brought onto the network a day. So we're looking at least, we're looking at basically a week's supply being consumed every week, and in some weeks even more is being done. Daniel Lee said, "Hey Jesse, what do you think of Chicken Genius recent comments? If you went over, it's sorry, I'll rewind. It depends on what you're talking about. Maybe you could clarify. I know some things that he said, but I don't know everything that he said." By the way, guys, Solana is at almost its highest level since January. So it looks like it's nearing its highest level since January. And I do know that one of the things Chicken Genius was saying that he was positive on Solana. He thought Ethereum had topped or whatever. I don't think Ethereum's topped. I think he just got burned with SBET. BMNR would have been better, but SBET and BMNR are both up today, and SBET, I think, oh no, I guess it's still trailing BMNR, but I think Solana is going to do well. I do agree with him on that. I think Solana treasuries could do well. They're up about 4 or 5% this morning, and I don't know what else he said though. Sound. Yeah, we can try and take a look at that. That's an AI play too, right? I don't love that kind of stuff. I wanted to talk Dusty Johnson. I think he's a congressman from South Dakota. He said that the Bitcoin crypto market structure bill is important. It's going to usher in a golden age, and that it's coming soon. Again, in the next week or two, we could see this. Bitcoin dominance falling dramatically. You can see what happened before. You can see what's happened this time and what's likely to happen again as far as a support zone. As Bitcoin dominance falls, Bitcoin could be going up while that happens. It doesn't need to be going down, or it will be going up when that happens. But Ethereum could be going up too, and Solana could be going up even more, or Ethereum could drop a little bit. Bitcoin dominance could go up a lot, and things like Solana could still go up. The whole general, it's going to be like a wave, guys, just swashing back and forth as it goes higher. I wanted to talk to this. So this is from HODL 15 Capital, I think. But one of the things I like about this, they show what's going on here for like IBIT, MSTR, Metaplanet, AltBG, SWC. They show what's happening net per week. And so you can see IBIT going up, but they don't have the numbers for Metaplanet and MicroStrategy, at least at the time they published this. But look at the previous one, September 1st, 3,150 Bitcoin mined. IBIT got 2,200 of those. MicroStrategy got 4,000. So you're already more than double what the amount of that was created. Then you had Metaplanet, SWC, some of these other top plays, and you had just a pretty massive influx. It says everyone else. And so I think this is just selling, including retail. But again, you can just see massive amounts coming in that are getting bought up by these Bitcoin treasury companies and the Bitcoin ETF. So again, there are things happening. There are OGs that are probably selling out into strength. That will stop though. And again, some of these wallets, like diversifying out happens every single cycle. OGs sell out of some of their big portfolios and they dial up the risk curve, or they start finding safety. It's pretty normal. If you made a shit ton of money, if you made tens of thousands, hundreds of thousands of percent, it makes sense to take some profits. Real quickly, stock market news. This is absolutely wild. Valuations like this are exactly what underpins the disconnect I laid out in the thread. So he's talking about how valuations in the S&P for the top 100 are way higher than they normally should be. I would argue a lot of this is because of AI, robotics, autonomy, chips. All these things are demanding higher valuations. Economies of scale are much bigger now than they used to be. And then you've got the buyback programs. I think this can continue much higher. But if you're worried about this, buy Bitcoin. I'll just keep saying that. By the way, Bitcoin is sitting at 112,321. So we're going up into this morning. That kind of leads to what I was talking about, guys, and I have been for a while, that I think September, everybody said it was going to be down. I said it would be up. I also said that Bitcoin had bottomed at 108,000, and I was 100% right about that. I even told you to the day when it had bottomed. Just in, Bitcoin illiquid supply hits record. So this is it would actually be better to look at this over a longer time frame. I don't have it right in front of me, but maybe I'll try and bring it up tomorrow, or I'm sorry, on Wednesday. But as a liquid supply grows, this actually helps provide a floor in Bitcoin. The more illiquid this is getting, it just allows the price to go higher and higher and higher. Once it starts getting more liquid, then you got to worry, but it doesn't look like that's happening right now. Joe Burnett said, we're at the end of Ray Dalio's long-term debt cycle. I think Ray Dalio he's just operating off the logic of the fourth turning, and he's, I think, way more bearish about the United States than I am. I'm very bullish about the U.S. He has gotten more bearish about China, though. For a while, that's where all of his money was. He made a fortune from it. His fund is a great fund, and he's actually a really smart guy. He's finally gotten around to the fact that Bitcoin is a thing. But he said we're at the end of, in this post, again, Joe Burnett says we're at the end of Ray Dalio's long-term debt cycle of the fourth turning. Equities are bid to extreme valuations. He's right. Real estate is extreme. He's right. Fixed income remains at extreme valuations. I would agree with that. The end game of all the long-term, I mean, if you're looking at it over a longer-term time frame, right? The end game of the long-term debt cycle is fiat debasement. Yes. The only escape valve is hard money. Gold was the hardest money of the past. Bitcoin is the hardest money of today. As the cycle continues to unwind, Bitcoin may absolutely demolish all asset classes. I agree with that. I'm trying to see if there's anything else I wanted to talk about here. Again, just a very bullish environment. I think Miles posted this. The macro top is not in. He's showing 280 to 300,000. That's kind of also what I see from a number of technical indicators and what I believe the fundamentals are bringing us towards. I think is at least 180 to 200,000 at the bare minimum. But again, I'm going to start dialing out a leverage probably in the 140, 150 range. I might keep some, head into that 180, 200 range, just depending on how everything's looking. But I do think that there's just a lot of bullish stuff happening, guys. There's a lot of bullish stuff happening. There's a reason Grant Cardone has sold his $43 million mansion and got Bitcoin for it and not cash. Okay? Yeah, here's the Bitcoin dominance thing that Benjamin Cohen was talking about too. And then let's just see, he might even have it on his page, just talking about Ethereum dropping. He hates Litecoin. There's a bunch of other stuff. Yeah. Anyway, Tesla Megapack keynote tonight in Boring Tunnel. Yeah, I know, I'm excited about that. Let's jump to that, actually. Let's go to Tesla. And we've got about 13 minutes, actually 12 minutes before the bell rings, guys. So yeah, Cole, don't forget, Tesla Megapack event will be tomorrow. This was 10 hours ago at 8 p.m. Pacific time. So that's going to be, what is it, Central time? 10 p.m. Central time in Vegas. And they'll be announcing a Megapack products. That's going to be exciting, guys. So again, Tesla's up 1% in pre-market, 3.64% last week, heading on our way to 400 plus. I'm very excited about that. Also, Tesla Robotaxi app cracked the top 10 biggest U.S. ride-hailing activation days ever. This is exciting because the other ride-hailing activation days for all these different companies, for Lyft, Uber, for Waymo, look at this. Waymo's over here at number 7,746. Lyft's best activation day ever was number 21. Tesla is number 10. And then all these others are like all combined, but it's different days where they did it the most. So Tesla's already entered the top 10, and we're just getting started. I mean, what the fuck? Also, just think about this. This should probably be under AI, but it's XAI Colossus data center to his list of fastest construction projects. They gutted the factory of 750,000 square feet data center in just 120 days and built their new one in 122 days, guys. Like, that's fucking amazing. Elon's calling out the U.S. Department of Energy for wind and solar comments that are just ridiculous, saying, hey, we've got these batteries. I don't know if you've heard of them. And we've got Elon Musk getting cred here for allowing free speech.
My kid's school, the epithet.
This is 4 minutes. I won't go into all of it, but it's awesome to see that everybody appreciates this. And I think an ever-growing crowd of people. And again, we've got different optimuses. It looks like we'll probably have it in like a silver black, a white black, and a gold black, and then a black black. I think we'll be able to get them in colors, and we won't be buying them right away. We'll be leasing them, it looks like, which sucks. I want to be able to keep my first Optimus. Maybe there'll be a way to do that. But it's happening. This is happening, guys. You better get ready for it. Sawyer says the first ever Tesla Model Y deliveries have officially begun in India on September 5th. That's going to be a big deal. Elon's got his new pay package. That's a big deal. This is a masterclass in how to design incentives. I mean, just look at this. Like, this is so great. If Elon gets paid, we're all going to be rich. And again, just pointing out the different phases. Phase 1, look at the breakout after phase 1. After the Model S delivery was good and people thought, wow, this Model S is crazy. This thing went up 1,800%. We consolidated forever. The Model X was a painful experience, especially those Falcon Wing doors. And then everybody was getting excited about the Model 3. So we started our breakout from phase 2 to phase 3. But then the Model 3 was being built in tents, and it was a fucking disaster. And so this stock consolidated for years and then eventually broke down to its low, sitting in the teens post-split. But then we started going up because the optimism of the Y was really good. There was a big drop where people were worried about the Y being bad and having the same issue as the 3 did over here that neutered this stock for 3 years. So it dropped really hard, and then people realized the Y deliveries were amazing and that there weren't the same issues, and then the stock jumped a ton, 3,300% increase in a very short period of time. And so I'm arguing now, with the start of autonomous driving, with energy blowing up, with India taking Teslas now, with all this backlash behind us and all the headwinds that are turning into tailwinds across the economy, and robotics, Optimus coming next year, and Elon being very serious now that he's going to grow this company. We're looking at the start of the next phase, and I think it gets us into the 2000s, the 3000s, into 2027. I think it's a really big deal. I think it's a really big deal, and I hope you guys are looking at that going forward, because I think, again, this mega pack announcement we're going to have, guys, we're looking at smaller mega packs here. There's something going on, right? And so we're going to see that businesses are going to have the ability to have a mega pack, and maybe we'll see some incentives for solar production. Elon said he's got it taken care of, and I believe him. And then we're going to see the Cybervan coming soon, along with the Cybercab. There's just, along with the semi. Oh my God. I don't know how you can't be bullish right now. And then you've got Starlink. Just another post here about how how their next gen cell to satellite service is just going to be insane. How many Tesla shares are you holding right now? I think I'm closer to $400,000 worth, whatever that is. Real quickly, AI and chips. Let's just jump through this. We got Grok hit 1 trillion tokens. 1 trillion tokens. Grok code fast one. That is insane. Grok code ships improved updates every 2 days, so you should notice rapid improvements. Nobody is doing what they're doing right now. Nobody. Peter Diamandis, AI spending. We already talked about that one. Or I guess AI spending is so high, it's boosted the real economy literally. The impact on GDP has reached as high as 1% in some quarters. Unreal. We're just getting started. It'll be 2%, 3%, 4%. It's going to end up just exploding higher. I just wanted to point out this again. I talked about it, I think, last week, but the AI opportunity in U.S. healthcare in one simple chart. So this, again, could be applied to Palantir and other companies. But just look at this. Look at how many physicians there are in healthcare and look at the number of administrators. This makes no sense. There is so much we can do to bring back money to U.S. consumers. Think about this within the healthcare space. Government programs through Robert F. Kennedy, where he works to get rid of the administrative state and works to incentivize efficiency throughout the medical industry. On top of all the deregulation we're doing, let's get rid of all these fuckers and make it to where we can give money back to people that deserve it. All right, let's see here. I'm going to jump over to Ethereum real quick. Maybe. Yeah, I don't remember where I bought in. Yeah, probably 320. That's probably when I got back in again. I wrote it up for a while too, and then I got out because I was jumping into these treasuries hand over fist. Turned out to be a little early to that, but early is kind of the thing that I'm good at. But not late. ETH is going to be $15,000 in 6 months. Here's why. I kind of think 10 to 15 is the level. DATs, again, all these treasuries buying billions in ETH, ETF billions in inflows. Now, stable coins equal $1 trillion demand, RWAs launching on Ethereum, staking rewards for ETFs, and deflationary, plus 30% staked supply. I agree with that. If activity becomes really, really large on it, on chain, not just layer 2, then we'll end up seeing this become deflationary and become better, harder money temporarily. I say harder with big quotes because I don't think that's true, than Bitcoin over a short period of time. But I do think it gets us to the 10 to 15,000 range. And again, just like emerging markets, I wish I had that chart. I couldn't find it in my bookmarks, but the emerging market looks like this too, guys. This is why I'm buying ARGT. I picked up about 20,000 in that. And I haven't documented it because it's only been like 500 at a time. But I do, and it's not even 1% of my portfolio, so it doesn't even register on my portfolio. But I am adding slowly. I'm adding to that as a long-term hold because emerging markets look like this. They look like the ETH BTC pair. And again, ETH is just back testing this level right now, guys, and looking to break out. I think it's way more likely. I disagree with Benjamin Cohen in regard to this. The ETH BTC pair tells me that it is just back testing right now and that it wants to go higher. I think Solana's running first today. But I do think that this goes higher. I think emerging markets go higher. I think industrials go higher. I think the Russell 2000 goes higher. I think all these things go higher. Do I have ETH? No, I don't have ETH. But I mean, I have a shit ton in Bitcoin treasuries. They're BitMiner is my largest position right now. Fidelity launches tokenized U.S. Treasuries fund on Ethereum. So again, this is just another really big thing happening. They're going to tokenize U.S. Treasuries on Ethereum. Ethereum dominance shows that it's hitting the cloud. Oh, 1 second. Sorry, saying goodbye to my daughter. Altcoins have never been this oversold, not even during COVID, peak bear market, tariffs, and trade war. Get ready for mega alt season. He's just doing others pair to ETH and showing the most oversold conditions ever. At a time where we're getting ready to lower rates, we've got the crypto total market cap, excluding BTC and Ethereum. Again, so this is the others outside of it. It's looking to break out. And Solana looks like it's doing that today, up 4.16%. Do not be bearish. There are so many things that are getting ready to break out. Argentina. Sony says Argentina peso slumps 7% at open after Malay loses local vote. What does it mean by losing local vote? Can you tell me? JC, Apex Predator scalping. BitMiner has purchased 160. Actually, this is old data. We purchased, I don't even know, I think right now, or maybe this isn't old. Maybe this is the last 24 hours. But essentially, we're sitting at 2 million coins right now for BitMiner. What's fascinating about that is that gets us, we're probably at less than 35% of their target. So we've still got the other, 65% to go. Yeah, we're going to squeeze hard, guys. And look at this. Ether Machine is at 4% of target. FGNX is at 0% of their target. There's a bunch of these that haven't been updated yet that are just not even close to their targets right now. So it looks pretty good to me. We got Fundstrat potentially going on Joe Rogan. I don't know if they're just trying to solicit or what, but again, good things coming. Let's see. I think we're done there. If you guys have anything you want to talk about, charts you want to look at, we'll bring them up. I do want to point out, I go to geopolitics super quick. Just looking here, you can see how, again, my German friend, Michael, says, can someone please explain why an average American needs twice as much energy as an average European? It's because we're smart and we realize that energy equals wealth. China's smarter, and their average energy per citizen is quite a bit lower, but they have a larger population, even though they lie about how many there are. So, but again, this is good. We're getting ready to consume a lot more, which is awesome for us. We just had the bell open. Let's look over here and see what we got. Here's what pre-market looked like. BABA was up 3% in pre-market. AVGO was up. Tesla was up. Communication sector down, probably from news of Tesla. Our ARGT's down 9% in pre-market. Cool. Fucking cool. I might have to buy some. But what do you have a post about what was going on? You know what? Maybe I'll just look real quick here. So yeah, pre-market guys looking pretty good outside of the communications sector. I'm going to look at what was going on with ARGT because I want to see. Let me see if I can see what was going on in Argentina. ETF in bear market territory. Okay. Argentina index started buying in contra ETF. See how it goes. What is the actual news? I'm looking for a way to invest in Argentina's rebirth. Shares of stock. Let me see. Latest. The culture. Let me see here. Translate post. Culture has become part of that. That was an easy life. Argentina. Okay. What is this? Okay. Returning to 3-digit inflations and undoing the progress made would condemn Argentina once again to poverty. Buenos Aires is a sick society. What is the actual news? I can't read this. What is the actual news? Since it's really collapsing and there's a good chance it still wants to previous bottom, be careful with the bounces. Let's keep an eye out. Oh, you know what? Let's just look at ARGT. This is fucking annoying, and I just want to see what it looks like. Because this is fascinating to me. In pre-market, or now that we're in market, we got Tesla up 1.58%. We got other things looking good. I'm just waiting for them to load here. I'm just going to pull up this Argentinian fund because I want to see what it looks like. I was actually looking for a rollover, so this is probably a good time to get one. Oh, fuck yeah, I love that. This could drop further. Let's see here. Let me see. I want to go back a ways. I want to do like a fib retracement. I'm going to call it back over to here, or should I go here? Should probably go more locally. We'll do it here. We'll look at like the worst case of the worst case. So we could see a drop, maybe even something as low as 64. I do like this one. It pays a dividend. And again, it was toppy up here. You could see a rising broadening wedge. And I need to actually figure out what the news event is and how impactful it is. I just don't know. Blaze Party lost an important vote. Yeah, but what is an important vote and what are the ramifications of it? I don't know what any of that means. But I do, again, you can kind of see here where we had dropped. Like, even if you said that this was support and when you were optimistic because we had this wick, really powerful wick, we kept touching this like crazy, and it's still a rising, broadening wedge. And so it's breaking down right now. And And it could be doing a megaphone pattern. And if it's doing a megaphone pattern, this would actually be an area of support. So I'll probably buy some today. I'm going to buy some. I'm going to buy some because I can only see, I would assume, I can only see him doing better. I can only see him doing better. I'm sorry. That's all I can see right now. He's got too many tailwinds behind him. What was the vote? Quantum Scope up 38%. Cool. Oh, no, I don't need that one. What do I need? I need SoFi. Let me go back here. I'm just going to buy a little ARGT really quick. Let's look over here and see where everything's sitting. So we got Sequoians up just a hair. We got the Russell up a hair. Everything's just kind of chugging along. We don't really have data. Let's switch this to today's market. Ooh. And see where we're sitting. Sorry, I just want to get a little bit of... I'll just do that afterwards. So anyway, we got Smarter Web Company in Europe up about 3.83%. In the U.S., we're down 3%, but we were up almost 21% on Friday. BMNR is up almost 3%. SBET's up 2.5%. ETHZ is up almost 10%. I'm glad I bought some of that with some of my SBET last week. Supermicro's up 1%. CleanSpark is down a hair. Mara's down a hair. Iron's down a hair. The Solana treasuries are up. About DFDV is up 5.5%. Upexi's up almost 4%. Solana or SOLT, the 2X fund, is up almost 9%. So we're seeing some good things here today. Let me see Metaplanet. What's Metaplanet? It's probably down today. So Metaplanet looks like it's trying to close its last gap. I actually think that's probably a good thing. And it has almost entered that last gap territory, guys. It has actually. It's closed some of it. So again, we got about 6% maybe down. In the U.S., we only have about a little less than 5%. Little less than 5% down to be able to get it to where Metaplanet has closed its final gap. I think once they've done that, there's this international offering, I think there's some pressure in the stock price because people realize there's dilution from the international offering. But I think that once we fill this other gap, that's the area where the last couple of times, once we filled the gaps, we took off. So I think we're 5% down on Metaplanet, and then I think we have the opportunity to take off. All in all, though, I think things are looking pretty strong. Maybe we can expect a strong day. We'll see what happens with the data point that's coming out in a little bit. I'll probably bounce here in a second because I really don't have much more to say. But let me see. What do we have today? We've got consumer credit change, and we've got consumer inflation expectations. I don't know that I trust the data because it's like survey sentiment data, but we'll see what happens with it. But yeah, I think, guys, just enjoy the day. Go out and do something. I got a lot of work to do around the house, so I'm going to do that. I will see you guys on Wednesday, and I'll catch you on X, okay?